Oh yeah. Oh yeah, that's right. She's so precious. She looks like a little tiny little bear. Yeah, she's very cute.
Oh, she's camera shy.
BitSwap is the hottest new way to trade tokens. Crawling all the top decentralized exchanges, BitSwap gets you the very best price and value for your trades. BitSwap is changing the game. Try it now at bitswapdex.io. Welcome to BitBoy Crypto, the largest crypto channel in all the interwebs. My name is Ben. Every day on this channel, I show you how to make money in cryptocurrency. If you like money in crypto, make sure to hit that subscribe button. All right, guys, in today's video, we brought back on Ellie Gonsalves. If you've been following since last week, we discussed what is money, and this week we're discussing what is Bitcoin. These are very beginner-friendly topics. We're going to help Ellie go from being a beginner to being an expert in crypto before this is over. Today's video is definitely very good if you are a beginner in cryptocurrency to understand what Bitcoin is, what its value is, who created it, and where it's going. So I know you guys love this series. Make sure if you want to check out Ellie, you can get her information down below to follow her on Instagram. Let's jump into the interview. Hey guys, I'm once again joined by Ellie Gonsalves. She is an Instagram model. She works with L'Oreal, a lot of cool stuff. She's recently got into crypto. And if you watched our video last week, we told you guys that we're going to be going through this series where we're going to be going through the very, very, very basics of cryptocurrencies. We take her from a beginner to an expert, at least intermediate. So Ellie, once again, thank you so much for joining us today.
Thanks for having me. It's good to be back on the show.
Yeah.
It's good to see it was very well received last week as well. I know that we were like, I don't know how it's going to turn out, but I'm really glad to see that people really enjoyed it and got a lot out of it. So I'm excited for series part 2.
Yeah, absolutely. We got a lot of good feedback from it. And it was kind of like high level feedback too. Like, wow, this is something that I really missed. I didn't even understand all this about, finance or economy or money. And people said like, this was a great starting point for them to really, wrap their minds around everything. So for this week, like last week, we talked about the economy. We talked about, finance in general, like what is money and, what is inflation. Today, we're really going to hone in on Bitcoin. And so I know you got a list of questions and we're just going to kind of start there and go through it. And hopefully everybody can, have a better sense of what Bitcoin is after this.
Yeah, absolutely. And I really just wanted to ask, because I know a lot of people just don't even understand this like I did. Like, what is Bitcoin and how, when, and by who was it even created by?
So for Bitcoin to understand what it is, you really have to go back to 2008. Which was the United States financial crisis. This was when the entire construction world, the insurance world, it all crumbled. It was a giant housing bubble is the long and the short of it. And what happened is there was a guy out there. A lot of people think it might actually be a group of people, and they saw all of the bank bailouts. And it was like the government said, you know what? All of you guys that are these corporations, you've done all this terribly irresponsible stuff with your money. What we're going to do is we're going to take money from taxpayers and we're going to give that to all of these corporations to bail them out because they're basically too big to fail. And so they got rewarded for all of their terrible decisions. And so a group of people out there, or one man, Satoshi Nakamoto is the pseudonym of the man or the group that created Bitcoin. We think it was a group called the cypherpunks. And there's a lot of guys that were associated with that. All of these guys got together, or this collection of people, and they said, you know what? It's not fair that the government can bail out all these corporations for this irresponsible stuff. So what we want to do, we want to create a currency for the people, because if the banks can just come take our money like that and give it to people that don't deserve it, then why don't we create something for ourselves that they cannot do that with? And so they came up with this idea for Bitcoin. It was birthed in 2009. And, it kind of started off as just like a very small, little idea. And Satoshi Nakamoto started mining it. And mining, of course, we can talk about that in a different episode, but mining is just how Bitcoin is produced, basically. And so over time, more and more people started getting into that network. There was a group, or there's still a forum that exists today. It's called the Bitcoin Talk Forum. And this was actually the original forum to where all of the ideas of Bitcoin were discussed. And that's how the idea spread. And a lot of those people that were involved in the early days of Bitcoin, that's where they congregated. And so what Bitcoin is, it originally, if you look at what is called the white paper. So the white paper is the layout of the architecture of what Bitcoin is supposed to be. there's a subtext on there that's very important. It says Bitcoin, a peer-to-peer electronic currency. So it started out supposed to be a currency that is electronic, that you and me can do business with each other without having someone else to get involved. So, if you go to, let's just say, a gas station to fill up your car, you take your debit card, you walk in there, and you have to hand it to the cashier. And so, if you're using a credit card, you get dinged with a fee whenever you use it. And then on the other side, the people accepting it are getting dinged with a fee because it's not actually our money that we're transacting. We're actually using these third parties, these credit cards, these debit cards, the banks. But with Bitcoin, if I walked in and wanted to pay for gas with Bitcoin and you accepted Bitcoin, I could walk in there and give it to you directly, and nobody else has to get in the middle of that. And one of the other things about Bitcoin is that it's decentralized, so no one controls it. I saw somebody on Facebook made a comment on a video of ours, and they said, "But what if Bitcoin decides to take the money and run?" Like, Bitcoin can't do that. That doesn't make sense. It's decentralized. Everyone collectively owns Bitcoin. No one controls it. No one can make decisions to make changes to it without the majority of people that own Bitcoin or mine Bitcoin, being involved in that decision. And so, but one of the things that a lot of people have a misnomer about is that, if I go and ask people on the street, what is Bitcoin? They're going to say it's a digital currency. And then the second thing they're going to say is it's anonymous, it's private, because people do stuff on the dark web with it. But Bitcoin actually is not private, it's actually, they can track it. There are companies called Chainalysis and CipherTrace, and those are two companies that can track Bitcoin transactions. So it's actually not private. It's semi-private, but there are roundabout ways of tracking it. But the big thing is that over time, Bitcoin, what it was meant to be, that electronic digital currency, peer-to-peer, it's changed because people have seen how much money, and I'm sure this is probably what got you interested in it, is you buy it, and what happens to it? Yep, that's right. Price goes up. So, Bank of America just put out a report, and they said the number one value of Bitcoin is that it goes up in price over time. It appreciates in value. That's its biggest value proposition. So over time, what we've seen Bitcoin transition from is from being more like a currency to actually more like gold, because people don't want to spend Bitcoin as cryptocurrency. And then that's opened up the door for a lot of other coins, altcoins, we call them, anything but Bitcoin, to kind of fill that purpose of being an electronic currency. So that's it. That's what Bitcoin is.
You got it down. Now I know.
Expert level.
Now I know exactly what we're investing in. Why would you invest in crypto over gold or stocks?
Yeah. And that's a really good question. I tell people, I remember if I go back to, the later part of last year when the government was printing money out of control already, like we talked about last week. And, my grandpa was actually getting very interested in Bitcoin. He's actually known about it for a long time, but he was trying to consider getting into it. And he said, the thing is I want to do anything I can do to get out of the dollar. And so one of his ideas was to get into gold. And, I kind of persuaded him that Bitcoin's a better bet. But I still will not fault anyone who thinks that they would rather put their money in gold than in US dollars, than in fiat currency. Because we talked about last week, it can just go up forever and be devalued over time. But for gold, the thing about it is Bitcoin is just a completely better asset than gold. Michael Saylor, who's the CEO of MicroStrategy, which is the number 2 Bitcoin holder in the world, he said that Bitcoin is the apex predator in the world of finance. Is that there's never been anything designed better than Bitcoin, because it has basically all of gold's qualities, except for, of course, being physical. It has rarity. It has a limited supply. It has value. There's so many good things about it, but Bitcoin's easier to transact with, right? Like, if you want physical gold, I got to ship that to you. And, that's kind of a big Ponzi scheme too, the physical gold world, but that's another story. But with Bitcoin, I could just send it to you like that. With gold, we don't actually know how much there is in the universe, right? We don't even know how much there is on Earth. We could go under the sea and there could be tons of gold. That we know that there's an asteroid out there floating around one of those planets. I think it's Saturn, and it's got enough gold on it, enough gold to give every person in the world $9.5 billion worth.
That ever crashed on Earth and everybody got gold, that would massively devalue gold.
Exactly. And so, so that's the thing, is with Bitcoin, We know exactly how much there is, and we know how it rotates, or how it circulates. When it comes to gold, it's a better option than cash, but not as good as Bitcoin. And so when it comes to stocks, stocks are valued in US dollars, right? So the whole idea of Bitcoin was birthed out of like, we want to make sure we're responsible for our own money. Well, if we had an economic crash in the United States, to get your money in stocks, you would actually have to go to your broker, move it over to cash, and then go withdraw it from an ATM. With Bitcoin, I don't have any of those concerns. Like if there's a financial crisis, I have my Bitcoin. That's all there is to it. Yeah. Like, and people make this argument like, what if the internet went out? Well, if the internet went out, we're going to have much bigger problems than where's your Bitcoin. But the thing is, when it got turned back on, like if there's like some electromagnetic pulse somewhere and there's no power for, weeks or days or whatever, or months, when it all came back online, your Bitcoin would still be there. But you also couldn't use a debit card either. Like you couldn't use a debit card if there's no internet anywhere. So,
Yeah, exactly.
Yeah. So, and of course, when you compare the returns of gold versus the returns of stocks, it's not even close. So, I got to say Bitcoin's better than both.
Yeah. Okay. I think all of the bad things that you've kind of heard about it, you think about how many people are out there trying to devalue Bitcoin and turn it into something that it's not, so they benefit from that. So I think that's something that a lot of people got to keep in mind as well. There's always someone who's got something to gain from the downfall of something like this that's so the way of the future. What are the risks that you have found have been like some of the biggest obstacles for you over the years?
Yeah. Well, I would say when it comes to investing in Bitcoin and the risks, that the biggest thing is, just like you said at the very beginning, right? Like you're investing in something you don't really know what it is. And so that's how we get people in crypto. I like to call it the Trojan horse. I Trojan horsed them. I just sent them some crypto. And then guess what? All of a sudden they're super interested in it. And that's really the way a lot of it works is people do get invested. They do own it. And then they start to understand it later because they see the upside potential. And they're like watching it like, man, if I'd invested more money, I would have a lot more returns. Like, what the heck is this? And that's how they get into it. There's a pretty steep learning curve for Bitcoin right now. And cryptocurrency in general, like even for the altcoins, it's even steeper. But at the end of the day, the biggest risk in Bitcoin is getting into it and not understanding it and not getting more education, because it can be easy. You guys might have heard the story of, it was very popular, like not in crypto, but outside of crypto on mainstream news. They were talking about a guy who had, lost millions of dollars of Bitcoin in a computer somewhere. He doesn't know where it is, or he can't get into it because of the password. But it's not like
he's got one more entry. He's got one more entry left, and then he loses the whole thing.
Yeah. It was because when he invested in it, he never thought it would be worth anything. Like he was investing in it early on when the prices were so low that he didn't put a priority on it because he didn't understand the bigger picture. And that lines up perfectly with what I'm saying here, is that you have to learn to understand it and understand the giant opportunity it is. That's why I was in Bitcoin in 2012 and I sold it on in 2013, because I didn't understand it. That's why I do what I do, is because I want to educate people so they never get, in that same spot that I was in. So the biggest risk is just putting money into it and not watching it and never trying to understand it.
Yeah, absolutely. In terms of someone who's coming onto the scene, how and where do they actually start? Assuming that they have that money there to actually invest in things that they don't have to spend on day-to-day, like items or bills or whatever.
Yeah. So I would say that, number one, if it's someone who doesn't have like a lot of money, and I don't know what a lot of money is to different people, but someone who, lives paycheck to paycheck, I suggest for those people, if you don't have a lot of money to afford to put in, just put $10 a week in. That's it. Just $10 a week. Most people can afford $10 a week. You don't get a Big Mac that week. You don't go to Starbucks that week. Or when it comes to, Starbucks, if you just cut that out, or if you just cut out something small, you can afford to invest a few bucks. I always tell people, people are real scared to tell people to invest. I always tell people invest, but just put a little bit in. And what happens is that same effect we were talking about earlier, is that they get in and then they start getting very interested, and then they start understanding like, wow, I can't afford not to do this. And so really sets people on a good track. For the other people who have money to burn and they're just saying, they're like, what do I do with this? It's a great idea to put it in Bitcoin. Obviously, holding money in cash is not a great idea, or in fiat currency, it's not a great idea. But you have to learn how to do research. There's a site called coinmarketcap.com. Or coingecko.com is another one. That's GECKO. Those are good training sites for beginners to go and look at those and start just looking at the coins and looking at the possibilities. You can click on each individual coin. You can look at their chart over time, and you may not even understand financial charts, but you can look at something and see that over time it's gone up, and that can encourage you to want to get invested in it. But everybody needs to start with Bitcoin because it is the safest. When we look at a lot of these other altcoins that are highly speculative, they have a lot of room on the downside. And I'm sure we'll talk about altcoins in a future video, but Bitcoin, it is volatile. It goes up and goes down, but it doesn't have, nearly the drops that a lot of the other coins do. So you want to start with Bitcoin. You want to figure out where to buy it. I know in the United States, we have Coinbase and Binance.us and then Cash App. Those are probably the three most common ways for people to buy Bitcoin in the United States. What about for Australia? I know we talked about one that you guys have.
Yeah, CoinSpot. Well, we use CoinSpot here. And I mean, I've been pretty happy with how we've been able to navigate through that. So yeah, I think that's a pretty good one here in Australia.
Yeah. And that's the thing is wherever you live, if you're not in the United States or not in Australia, you got to find out which one is in your area, because you guys know there's always a lot of people, a lot of regulation in different countries that prevent people from using different apps. I know I don't know if we could use CoinSpot or not here, but you probably couldn't use Coinbase. I don't know. But yeah, so you got to figure out what you want to invest in, which should be Bitcoin first. It's always going to be the biggest suggestion. And then you got to figure out where to buy it. And then from there, the other thing is trying to figure out where to hold it. So I kind of have a different opinion than a lot of people in the crypto space. A lot of people will tell you that you do not want to have any cryptocurrency on exchanges. Like if you buy it on the exchange, you want to either use, what's called a hardware wallet, which is a USB device, or you want to use maybe it's a wallet on your phone or some other type of wallet. There's even wallets, believe it or not, called a paper wallet. You know what a paper wallet is, Ellie?
No, please explain.
Oh yeah, you're going to love this. A paper wallet is literally a piece of paper that it's just a QR code on a piece of paper. And you can actually send your Bitcoin to that piece of paper, and that's where it sits. Because cryptocurrency is kind of weird, right? Like we know that. Yeah. But when you're using a wallet, it's an access point to the network. So a paper wallet is a physical it's got that QR code you can scan. It's a physical representation of, that wallet. And so, people will tell you that's the best way to do it. What I always say is for beginners. Now, look, if you invest $100,000 in cryptocurrency, you're going to want to know, you're going to want to know solutions for storage. But if you've got like a couple $100 in and you're newer, I encourage everybody to take those steps to learn about how to store your crypto. But I would argue that many, many more people have lost their crypto when they're new, trying to send it to different wallets and trying to get all that set up and just keeping it on exchange at first. So I would say if you're brand new, buy it on an exchange like CoinSpot or Coinbase or, some of the other ones. Keep it on there until you're very confident you know how to transfer it off.
Yeah, we a friend of ours just bought over one of the USB wallets, which he chucked on the table, and I was like, what the heck is this? Like, it looks like a fingerprint scanner.
Yeah, it does.
I was like, what is this? It's like some 007 shit.
It is. And we actually, if anybody's interested, we do have on bitboycrypto.com/deals, we have, you can buy a Ledger wallet. We have a deal for that on that page. So, we like Ledger. It's the oldest. It's the most secure. It's been around forever. It's never been hacked. So there are some good ones out there. But they do have a learning curve. And a lot of people end up just keeping it on, exchanges or keeping it on what's called a hot wallet, which is a wallet that's on that has internet access. So it's like connected to your computer. So if it's on a computer, it's called a hot wallet. If it's on a device or if it's on paper, like the paper wallet, it's called cold storage. It's a cold wallet.
Why is Bitcoin worth so much now as opposed to 5 years ago? And what has the reason why it's grown so much?
Yeah. So, it's kind of funny. I just did a video today and I learned about a thing I had never heard about before. It's called the Tinkerbell effect. Have you heard of this? You do kind of look like Tinkerbell a little bit. You could play Tinkerbell in the Peter Pan movie, I think. I think you could do it.
I mean, yeah, I'm putting it out there. I'm putting it out to the universe.
Yeah.
If they're going to make another Peter Pan movie or a Hook movie, I've got this is the look.
That's it. It is the look.
The
Yeah. But the Tinkerbell effect is actually an economic principle, and it's based on the line in the movie Peter Pan where he says that Tinkerbell only exists because little girls believe she exists. And so in the world of finance, it's like a lot of stuff can be self-fulfilling. Like the price of Bitcoin goes up because people believe the price of Bitcoin can go up. I know it sounds kind of funny because, we think there's this idea that like our money is backed by something, right? If you go back in the earlier days, it was backed. Like we talked about last week, it was backed by gold. But today we know that the fiat currency is not backed by anything. The only thing that gives the US dollar value is that we all agree here in the United States that the US dollar has value. But you know what's interesting is that can change. If I go to my local convenience store and I go buy a soda, a bottle, like a 20-ounce bottle, is going to cost me about, $2 or $3. However, if I go to Disney World, which is in Florida, and, it's got gas stations all around it that have, the $3 Cokes. But if you go in there, you're going to pay $8 for a Coke. And we're all just going to say okay, we agree. I agree that here at this place, I'm going to pay a different value for this thing. Why is that? Because I got you trapped there. It basically boils down to the fact that we all agree that Bitcoin has value. And so what does that actually look like? It's based upon how much someone's willing to buy it for versus how much someone is willing to sell it for. So if you were to go to a Bitcoin exchange, like we use Bybit a lot here on the channel, if you go there and you look at the charts, you can see the order book and you see different price points people are buying at and different price points that people are selling at. And now in general, that's all it boils down to is how much someone will buy it for versus how much someone will sell it for. Over the amount of time of Bitcoin, and I'm sure we'll talk about the Bitcoin halving and the Bitcoin cycles in another video, but basically there's being less Bitcoin produced every 4 years. So the first 4 years, there were, for every block that was mined, there were 50 Bitcoin that were produced. Then after that, 4 years later, it was 25, and then it was 12.5. Today, it's 6.25. What that actually equates to is today, about 900 Bitcoin per day are created. Now, when you look at the supply of Bitcoin, the total supply is 21 million. That means there will only ever be 21 million Bitcoin. There's 18.6 million of those, and this is going to really demonstrate the kind of exponential effect of cutting the production in half. There's 18.6 million coins that have been created in the first 12 years of Bitcoin, or I guess it's now, 12 years of Bitcoin. Do you know what year the last Bitcoin will be mined? 2140. 2140. What? So the last 2.4 million Bitcoin, it's going to take another 119 years to create them. That's the exponential effect of the amount of Bitcoin produced getting cut in half every 4 years. And so we have so much longer before they're all going to be made. And in the last 4-year cycle of Bitcoin, there will only be 1/2 of one Bitcoin created in 4 years. So that's the power. So the point is that the thing that gives Bitcoin value is that what people are willing to buy it for versus what people are going to sell it for. But the scarcity and the rarity and the cut in production, if you think about oil, for instance, I don't know how much you know about the oil market. I didn't know anything about the oil market before I got into cryptocurrency. So the OPEC is a group that controls the oil prices. When they cut the production, the value goes up because there's less being created in the same demand. So each individual barrel costs more. Same thing with Bitcoin. The more we cut that production every 4 years, the higher the value theoretically goes. And that's why when you look at the volatility, if you look at a Bitcoin chart, you'll see the price go way up, way up, way down. Then it'll go way, way, way up, and it'll go way, way, way back down. And the thing is that if you zoom out and you look, it doesn't look like that. The chart doesn't look like that. It just looks pretty much like it's got a few spikes. But in general, the value has gone way up over time. And that has a lot to do with that cut in the production. When you look at the biggest companies in the world right now that are buying Bitcoin, they're actually buying more Bitcoin than is being produced every day.
Yeah. And I saw that JP Morgan Chase bought an obscene amount of Bitcoin. So they're in America, one of America's biggest banks, or one of the biggest banks in the world. And if they're buying Bitcoin, then obviously it's a good investment.
Yeah. And Tesla, they're buying Bitcoin. And what we're starting to see is these companies are starting to realize that like Bitcoin is going to make them more money than their products.
Yeah, exactly. So true. So if that's, I mean, like invest.
Yeah, invest. And like we were talking about, with what the value going up, I'm sure maybe next week or maybe the week after, we'll talk about the Bitcoin cycles and you guys will understand that a little bit more. We'll talk about Bitcoin mining and maybe we can talk about the Bitcoin halving. It's too big to unpack right now at the end of this video, but we'll save that
for
one.
Another episode.
It's for another episode because really the Bitcoin halving is actually the biggest catalyst for the increases in the price over years. So for people to really understand why Bitcoin's growth will continue and the price will continue to go up, I think that will be a really good episode where people can understand kind of the beginner-friendly version of what actually happens behind the scenes when Bitcoin is created.
If you had $5,000 to invest in this space, obviously we're not going to be able to buy an entire Bitcoin or Ethereum with that much. So like, how does that work? Like if someone's got $5,000 to spend, they're not obviously going to get a full Bitcoin or whatever.
Yeah.
But what are they going to get for that?
Yeah, I think that's another one of the big misunderstandings about Bitcoin is that you don't have to buy a whole Bitcoin. I hear from people all the time, like, you should get Bitcoin. And they're like, I don't have $50,000 or $60,000, whatever it's at that day. You don't have to. So a Bitcoin is broken down into 100 million parts, right? Like a dollar is broken down into 100 parts, right? It takes 100 cents to equal a dollar. Well, it takes 100 million parts to make a Bitcoin. And each one of those parts are named after the creator, Satoshi. So, a dollar has 100 cents. A Bitcoin has 100 million Satoshis. So you can divide that up in so many ways. One Satoshi is worth way less than like 1 penny, for instance. So you can own almost any amount of Bitcoin. And I tell everybody, like, if you're going to get into crypto, it is important to own some Bitcoin. But if you have $5,000 and you're looking for, a good way to invest that, I would say maybe put 25% of that into Bitcoin because you just want some exposure to Bitcoin. It's kind of like many people compare Bitcoin to investing in Manhattan real estate in the 1800s, which would be quite valuable today. That's obviously New York City and, super, super expensive. Like imagine if you just owned one apartment in New York City. You couldn't own the whole building, but you could have one apartment. You could have one room and you could rent that and you can make money off that for the rest of your life. You may not be able to own one entire Bitcoin, but if you can just own a part of a Bitcoin right now, while the prices, in my opinion, are still much lower, I believe Bitcoin will eventually go over $1 million per coin. So right now, your opportunity at $50,000 to be able to own a fraction of a Bitcoin for $1,500 or $2,500 or something like that is very valuable. So you want some exposure there. But then we could get a little more into altcoins in another episode and what they are. Ethereum has actually consistently outperformed Bitcoin year over year since its existence. And you kind of think of it like this, right? This will blow your mind here. Okay. Do you know how much one Bitcoin costs in the very, very, very beginning?
All I heard was a guy tried to pay for his McDonald's with 2 Bitcoins back like in 2009 or 2010.
Yeah. So we have a pretty famous story we talk about here, but there's a guy that paid 10,000 Bitcoin for 2 pizzas. It was Papa John's Pizza back in 2010, right? Yeah, it's crazy.
Oh my God.
Are you a fan of pizza?
I love pizza and I love Papa John's.
Yeah.
I love Papa John's. I love Jimmy John's. American food is like, it's so amazing.
You want to be careful with someone that doesn't like pizza. We all love pizza. But would we pay 10,000 Bitcoin for a pizza? Probably not. But the thing is when Bitcoin first started, you could get 4 Bitcoin for a penny.
Oh my God.
1 penny would get you $200,000 basically today. That's crazy, isn't it? So when you look at the rapid growth of Bitcoin from 4 Bitcoin for a penny all the way up until where it is now at $50,000 or $60,000, depending on whenever, this video comes out. The thing is, the most rapid growth in investment for Bitcoin is now over, right? Like it's already gone up so high, it's ridiculous. From here to $1 million is about what we call a 20x, 20 times 50 is going to get you $1 million. But if you think about 4 Bitcoin for a penny to $50,000, that you can't even really wrap your mind around that percentage gain. So for Ethereum, some of these other coins that are newer.
Do you think that that jump would ever happen again in the future, or do you think it'll just slowly climb?
Yeah, for Bitcoin, well, yes, I do believe that this is kind of generally how I see things happening, is Bitcoin going to $200,000, $300,000, $400,000 by the end of this year, and then dropping down at the end of the year. And then we go through a year or two where things are stagnant and people say Bitcoin's a scam again. And the price could drop back down to about $40,000, $50,000. And then in the next run in 4 years after the Bitcoin halving, which we'll talk about another time, then we can see the price of Bitcoin going up over $1 million. So it could happen in 4 years, but that's still 20 times growth from here. Sounds tremendous. But if you think about the infinite growth that it had from the time it was created to now, the best opportunity for Bitcoin, to be able to put in a few dollars and become a millionaire, that's over, right? But for some of these other altcoins like Ethereum, there still can be a lot of explosive gains in there. That's why it does consistently outperform Bitcoin. So if you had $5,000, I would say put $1,500 in Bitcoin, and then I would put the other $3,500 in Ethereum, which is a whole different animal that I'd love to explain, to you on a later video.
Yeah, absolutely. And would you just let that, for someone who doesn't understand it, and then what they see in movies is they see the traders and on Wall Street and they're like, buy it and sell it. Are you going to sit on it? Or, for people who genuinely don't understand that side of things, do you just buy that and you sit on it? Or do you buy it and sell it in 6 months? Or what would your suggestion be?
Well, we have a word in crypto. It's called HODL. Have you heard the word HODL before?
I think on your channel before.
Yeah, probably so. So remember earlier when I was telling you about when Bitcoin started, it was created on the beginnings Bitcoin Talk Forum, right? So on Bitcoin Talk Forum, there was a guy who made a post. I think it was in 2014, I can't remember the exact year, but he said that he was a terrible trader. He had decided he had tried trading so much and he was just terrible at it and he was never going to do it again. And he made a typo. And he said, I think I'm just better off if I hodl. It's supposed to be hold. So when we say hodl, it means hold, but it goes back to that typo that guy made on that forum. And, it's just become kind of in the crypto lexicon, if you will. So the word hodl means if you're a bad trader and you can't time the market right, it's better to just sit on the Bitcoin, because over time, we know the value is going to go up. We've seen it consistently throughout history. Trading is a whole different animal, and trading is where, you can do it on a daily basis. There's day traders out there. There's what we call scalpers, which are people that will make multiple trades in 5 minutes or hours. But it's something that you got to have a better understanding of to really know how that works. The very optimal way to handle a crypto portfolio is to understand the Bitcoin cycles, to understand about when we talked about last week, the bull market, when prices are going to go up. When that ends, taking your money there that's in crypto, you can keep some in, but taking the majority of it and moving it over to what we call stable coins, which are coins that always equal one amount. So like Tether, for instance, or USDC, they always equal $1. So you can take your crypto gains, let's say you put $5,000 in Bitcoin. Price of Bitcoin goes up 5 times from here. It goes to $250,000. So now you have $25,000 in Bitcoin. You can take that Bitcoin at the peak of the market, you can move it over to a stable coin. And then when the price of Bitcoin drops in the bear market, when the prices go down, now all of a sudden, maybe you could afford a whole Bitcoin with that amount instead of just a fraction, because you've taken advantage of the top of the market and you're not going to lose dollar value when you move to stable coins. So the optimal way to do it is to sell the top and buy back in at the bottom. And that's how people can actually make, life-changing money. A lot of people think you make the life-changing money now when the prices are going to going up. But the real life-changing money is when the prices go up, selling the top, not because you don't believe in Bitcoin or cryptocurrency over the long term, just because from a financial perspective, it's consistently shown that you sell that top and then you get back in at the bottom. And now all of a sudden you've increased your Bitcoin holdings by a tremendous amount for the next time the prices go up. Does that make sense?
Yeah, absolutely. You buy low, sell high. So what is one thing that you would tell yourself that you know now back when you were starting out on your crypto journey?
Get educated. This is why I run this channel. I accidentally got into crypto. Like I don't, a lot of the mining, it's over my head sometimes. The technical perspective of blockchain, like literally what it is and nodes firing back and forth, like that's not my specialty. My specialty is like understanding the news around the market and understanding what the different coins are and their use case. That's great. But if I were to go back to why I originally got into this, it was an accident. And then I sold it all before I knew what it was. Like I made some money on it and I was like, let me sell this money for $2,000 or $3,000. It was somewhere in between there. I met a guy at McDonald's and sold it over the Wi-Fi from a website called localbitcoins.com in 2013. And so I made a few $1,000s. I thought that was great, but I remember sitting down in that McDonald's and looking at my laptop while I was waiting on the guy. He was late. He went to the wrong McDonald's. He's probably a billionaire now, but so he came before he got there. I remember researching like, what is this? And back then in 2012 and 2013, there just wasn't the education resources available for Bitcoin. And so it was just way over my head. And I was just reading it. Like I decided later on when I saw the prices going up tremendously that I made a huge mistake. And my biggest mistake was not selling. My biggest mistake was not understanding what I was looking at and not understanding the large impact that this could have on the world that totally changed, the financial system. So, that's what I would go back and tell myself. I would actually shake myself and I'd say, learn what this is now, like definitely because, what the kind of the cycle that happens in Bitcoin is when the prices are going up, people get real excited and they want to learn and the prices go down and they forget about it. And then 4 years later, they're like, oh man, I wish I would have stayed in and learned more. So that's always what I would tell myself. That's what I tell everybody. So I'm so big on, pushing the education on this channel.
Yeah, absolutely. And I think that is, that's really, really great advice for anyone who's actually looking at getting into this than to just invest money and then try and buy low, sell high.
Yeah.
And make a little bit of money. But I do see it as a long-term investment on my part. And yeah, I think that having a chat with you and doing this series is going to help me tremendously really understand so much more about just crypto and investing and, like what kind of things you would do differently when you were younger and everything. So yeah, it's awesome. So
yeah. Did you just call me old?
Wealth
Did you just call me old?
No.
Did you just say I'm old, Ellie? My gosh. I just dated myself. I got my Mike Tyson from my Nintendo days back behind me.
Don't listen to me.
Well, Ellie, thank you so much for joining us again today. And if you guys want to follow her on Instagram, we'll make sure we have the link down below so you guys can go check that out. To the audience, everybody out there, make sure you just drop us comments and let us know what you think about the series. What do you want to see next? What are the other topics that you want us to cover? And Ellie, I guess we will see you next week. And to the rest of the audience, that's all I got. Be blessed. Way out.